Okay, good morning, guys. Just pre-recording this a few minutes before you guys come in, so I can do some more work before the market opens. So today is Friday, last day of the week, and since last few days we've been stuck in this range, and this range was pretty much a given, like around these levels, right? But still, there was uncertainty around these levels right here, around 3600. But so far, we're still in this range of 3650ish, I would say, and 3800. And today, pre-market, we're finally above it. The only question here for me becomes, can we hold above 3800 plus, right? 3800 plus, can we hold, right? So far, the theme has been a slow grind up. A slow grind up has been the theme, and the market has been holding well. And I also posted the OI today, the most the gamma expiring today in pre-market prep. So by spot gamma, obviously, just watch it. You guys will get some important strikes. On SPY, we have 380, right? And then SPX is towards 4,000, but which is I would say with time, right? But this is what matters to me: the SPY 380, which is roughly 3,800 on SPX. All right, and SPX a slow grind towards 4,000, 3,900, 4,000 range into next week. And I think with the quarter end, with the rebalancing, there might be some flows coming in, which will probably take the market up. All right, and then in July, new month, new stuff, and then we see what happens. And I would not be surprised if we get rejected right around here, around these levels, as a resistance, right? So I would not be surprised if something like this happens. If something like this happens, right, and then we build, and then we finally break into the next leg lower. All right, because I do think that on SPX we do test 3,400, 3,200 in the coming weeks and months. Another scenario that's possible, I'm open to both sides. Another scenario that's possible is this: that we go up towards 4,000, right? We consolidate here, whatever happens, there's a good chance we can even go all the way towards 4,300. All right, this range gets open after the June month. Here, let me tell you guys. So JPM support, JPM 3,600 expires by the end of the month, and then into July, we need put buying for further strikes down for another leg down. This is very important and key level if the market want to go lower. All right, we need to have more put options, buy in at 3,700, even 3,500, 3,600 if we want to break this leg lower, which I think does happen eventually in the coming weeks and months, but let's see. But the reason I'm saying this is, instead of me, because right now I'm expecting a resistance, I am expecting resistance, that SPX comes around to these levels, which is 3,900, 4,000, and then we go lower. But I do understand one thing, options will obviously give a better guidance as those days come in the first week of July. If we hold and if we bull flag above 3,900, 4,000 by any chance, and we start breaking up higher, and there's not enough put buying, I'll repeat that, if there's not enough put buying to the downside on the lower strikes, if the market is not hedged too well, and they're buying equities, we can absolutely go towards 4,200, 4,300. All right, so I'm not being biased here to one side. I'm just saying that this is possible. So keep that open-minded. I don't think we get there. I think we play out this scenario right here towards the downside. But that's another scenario that I just want to keep you guys alert from my views. All right. So let's see how that works. And today again is Friday. 3770 has been our key level all these last few days, right? And 3770, and now above 3800, doors are open towards 3855 and then 3900. All right. Personally, I am doing this in the markets right now. To be honest, this is what I'm doing right now in the markets. Patiently waiting. All right. Those of you guys that understand me, I wait a lot for great setups. I don't like trading this chop. I do it in and out sometimes, but patiently waiting for my next big play, and obviously protecting cash. Protect cash. Protecting your balance is your job as a trader. All right, just because you're sitting there waiting does not mean you're not doing nothing. You're protecting, you're sitting on your cash, you're protecting that balance. Without that balance, you don't have nothing. All right, this matters. This is very important. A lot of people don't stress on this, but you guys need to understand to protect your accounts. Those that have been trading for a long time understand why I'm saying this, right? Your account can go up. You can start your account from here. All right, you can start your account from here. For example, everything is good. Oh, you're making money, loss, you made back, you're happy. But then after 6 months, your account can be down also from where you initially started. All right. So that's what I'm saying, protect your cash. But if you did your due diligence, you protected your cash, or you were patient for the markets, you could at least plateaued or something and then maybe resume the uptrend again. All right, so that's all I'm saying. Okay, and apart from that, TNX rates are a bit up this morning. TNX rates are a bit up this morning. And one thing I want to show you guys, I'm just going to compare two charts. Let's compare. Which one am I going to compare? What do you think? Let's compare TLT. So I took a long position in 20-year bonds yesterday, and I see that LB also took it, right? And I bought time for August, right? First, I'm gonna go over TLT on the monthly, just technically first, right? That we are at a long-term trend line, right? So let's see if we can hold this, and we can bounce. I bought into August, right? A lot of selling volume last few months, as we know, into the bonds, follow this market beautifully. But now, can we hold these levels? Can the rates come down a little bit? On the 10-year, we're right near the 310. In the pre-market, we're a little bit green. But if the rates start coming down here, if we can test 270 or 280 on the 10-year, TLT can probably go up 4 or 5 points. All right. Usually it's the inverse of the TNX, right? And then obviously there's a lot more into this at bigger levels. I can send you guys some Twitter threads that you guys can read to understand more about the bonds. All right. But it's not been a great year. But from here, I'm just looking for a rally only up towards 120, and that's it into the coming weeks. Okay. But these names have a lot of gap ups and downs based on the overnight moves and whatnot. Personally, I'm just looking for this zone right here, 118, 120ish, and I'll take my profits. All right. So let's see what happens. Pre-market, we're opening a little bit lower. Can we reclaim about 114, 115? But again, this more than technical. It's based on other macro stuff. So let's see how this one plays out. And Amazon is up nice pre-market. Tech has been holding strong, a nice little W pattern. Kara, good job on calling this out. And Amazon, the levels are pretty clear. 110, 112, 115, and 120. All right. And guys, don't get too bold up. I understand the way the market ran yesterday with all these green candles that we saw. People think, oh my God, they missed, and the market is going to keep on going up. The same thing that probably happened to you guys right here, right? Because that's the job of the market. That's how they play with you psychologically. That's how they play with you mentally. I'm just gonna show you this right here on the 5-minute chart. Right when Amazon started breaking out, many of you guys were probably, your heartbeat starts going faster. Oh my God, the market's going. The market's not going nowhere. It was here 100 years ago. It's gonna stay here when you die also. All right. So on this little rip, don't be scared. Don't be like, oh my God, it's gone up. I missed an opportunity. No, nothing happened. Don't ruin your sleep. Amazon's still down from freaking 100 points from its highs, you know. So just relax, calm down. Many of you guys, these things don't end too good. Or you guys here see they come down. So today, if the rates take over and then the market gives up, 3,800 gives up, or something bad happens, this can just come down as fast. So if you miss a trade, learn to miss it. Don't have FOMO. It will help you much more in the longer run. All right. And guys, the reason I stress more than technical charts pre-market, and I talk about other stuff so that we can cover both. All right. So we can cover both. Right. Technicals, you guys have learned great. LB has taught you guys a lot of things in the past. I think 1 year, more than 1 year now. You guys have learned your technicals. Right. If you haven't, just go to sessions. We have some great videos, or attend post-market. Post-market, LB draws some crazy, amazing trend lines and whatnot. Right. But I talk about other things so that we balance it out, and you guys can also understand not just the trend lines and support lines, but also the other aspect of the trading. All right. And apart from that, I don't have much to cover because Google is also the same as Amazon, similar. Yep, Apple almost similar. So for me, the only question is, if I go on SPX, can we continue going higher, or do we just come up here towards 3,900, 4,000, and then the next leg builds lower? For this, I'm going to be watching, paying attention to flows, and let's see what happens. One name, VIX, has been getting a lot of call flow to the upside lately. I haven't really seen that continuously. So for VIX to go above these levels, like shoot up, some sort of an event or trigger has to take in the place in the markets. It will be worldwide headlines, worldwide news. So let's see if we get anything like that, or it could just be hedge protection and VIX continues coming lower. All right. So these things I keep in mind. It helps me with my position sizing and whatnot, and helps me manage better. All right. And with this, I think I'll end it. Let's see what we have, and the market looks great for now. For now is a very key word. Also FDX, guys, pre-market is trading up high. Now FDX beat their earnings per share and revenue. Now don't be mistaken, they add fuel charges. All right. If they did not add fuel charges, their revenues would be way down, and their earnings per share would be a lot more down. Okay. So they add the fuel surcharges to their shippings, but their shipping volume has decreased. Now, what does that mean? This tells us, all the e-commerce businesses, right? Who does FedEx deliver? E-commerce mainly, right? That tells us that there's not enough sales going into those markets. All right, so you have to think like that. So let's see, and which is not good for the market. So their earnings for FedEx, fine, they're up pre-market, but their shipping volume has decreased, and they gave mixed results. All right, for 2023, their guidance was okay, which is not bad. But this is the comment that I'm more worried about, because with this, who's going to be affected, right? Amazon, Shopify, Etsy, all these players, all right, and obviously other manufacturers as well if the products are not being sold. So let's see how this plays out in the coming weeks, and we